All right, I think we're right into session number 2. So we're moving right into the global trends topic. And I'm inviting Klaus Wilkens and Peter Askew. Peter's is the president and CEO of Guy Carpenter Canada, and Klaus Wilkens is the CEO and president of Munich Re Canada. Klaus is recently, and I'm going to say within the year or so?
7 months.
7 months. He's joined us from Europe, so he's got recent perspectives on the global trends. So we've prepared a couple of dialogue questions. This is more of a fireside chat to talk to 2 learned P&C folks about what's going on in the Canadian insurance market. So including private and governmental and mutual insurers, we know that there's 300 insurers licensed in Canada, and 195 of them are publicly disclosing their financial results. In 2022, 5 companies held 50% of the market share and 15 companies hold the 80%. Although we are seeing new insurance company entrants coming into Canada, we are also seeing markets leave Canada and strategically changing their business. Are there any barriers to entry to do business in Canada? What are we seeing?
First of all, thanks for having me. Maybe if I start with a perspective from a global level and as a new market participant for 7 months, so a bit of hypothesis, but for some areas I might have some kind of experiences as well.
Sure.
So generally, I think the Canadian market is interesting. It is relevant. Canada as an economy is the number 8, number 10. Maybe it depends on the year you pull the numbers together, but this is quite important, right? So the economy is relevant. It is growing. From a German perspective, it is growing at an incredibly high level, even though you might be a little bit frustrated about the current growth, but it is growing, and it means that there's a lot of values, a lot of interests to be insured. So therefore, I think it is an attractive environment. And what is also positive about Canada now from an international perspective, it is politically, culturally, it is stable, reliable, legally. I mean, we've got so many lawyers here in the room, so it's nowadays it's not to be underestimated. So it's a relatively positive environment to engage as a company and whatever kind of sector we are talking about. Interesting is maybe to share some personal experiences about companies being based in Europe who were now particularly active in the direct space, and they were working with us, asking our advice on potential expansion markets. Canada makes the list pretty quickly when you do your kind of desktop analysis. So where are the markets which are big enough to consider as a kind of a new area or a new market segment to expand into? Oh, is this a fire drill?
No. That's the testing of our security alarm.
Okay. We've got insurers here in the room now. We are scared.
That's going to happen.
Okay. No, I'm trusting you. You're a lawyer, right?
Yeah. I got you, Klaus.
So Canada makes the list pretty quickly when it comes to the desktop analysis as a kind of an interesting market. Interesting by means of the volume. Canada, though, drops the list pretty quickly as well when those parties go into the details of the market and also analyze, so how easy is it to act in this kind of market. And one topic, and I'm saying it very openly, and I'm interested in a kind of a controversial discussion, is regulation. So it's
Sorry, Jackie.
yeah. Yeah, so I mean, this is a kind of personal experience. Companies they analyze the market and they simply come to the conclusion. Canada is definitely not the only one which is cumbersome in terms of regulation, but it stands out to be absolutely honest. And so it's regulation. It's of course also complexity in terms of provincial specific rules, regulation, and it's also culturally very diverse. And it's a big country. So we've got 40 million people, give and take, which is a lot. But those 40 million, they're quite spread out across various time zones, across various cultures. So in most cases, according to my experience, those companies, they go after other markets, which are bigger, easier to access in, and easier to work in. That's something I think which is worth considering.
Peter, is Canada a good place to do business?
I think so, absolutely. But I think it's a balanced approach. And Klaus, I think some excellent comments. Anyway, and also thank you for the invitation to be here and have this dialogue. It's really warm in here, so you must have had a really exciting first session. So short answer, yes, I think it is an attractive territory in which to trade, and I want to balance my comments between both insurance and reinsurance. We do continue to see companies interested in coming into Canada and setting up, and we've seen some of that more recently, although I would argue that it's more on the commercial and specialty side than it might be on a general sort of personal lines and much broader entity affiliation and interest. I do hear from my clients quite regularly in terms of the regulatory burden, how they're navigating it, the additional work they have to do to respond to either provincial or federal queries, surveys, et cetera, et cetera. So, that's not getting any less. When we think about the reinsurance sector, I would balance it in two ways. We've had some come in more recently. Sompo, for example, started up in the last 18 months, both insurance and reinsurance. But equally, we had one depart, being Validus, which was purchased by RenRe about a year and a half ago, and decided from a balance sheet perspective and a regulatory perspective, they did not want to have a business here, and they felt that they could actually access Canadian risk in the way that they wish to do it as a unregulated, non-licensed entity. When we think about the size of the market, in excess of $80 billion, geographically diverse, peril diverse, although not without its events, which we'll talk about at some point this afternoon, it still represents to a lot of participants a very interesting and I think a viable territory in which to trade.
I think that's what we see. Go ahead.
May I have one comment before it drops my mind? So there was quite an active discussion about MGAs. MGAs, they're not only acting in Canada, but they are growing above average. And I think there's a reason for that, which got to do with regulation. So it's one way then to escape market entry barriers. So I think it is absolutely right to put some kind of focus on that kind of an area to create a kind of a level playing field.
Yeah, we're seeing, I know, because we do a lot of new entrant work and we work with a lot of smaller companies, not the top 15% all the time. But the regulatory burden is what I hear, for a smaller company or a smaller reinsurer coming in. But at the same time, there is flexibility to come in because OSFI allows for virtual branches, and we see that deployed with smaller reinsurers. We're seeing a lot of activity from Asian companies, Far East companies wanting to consider Canada, whether it's from India or Korea, Japan. We're seeing some interest from those markets wanting to enter Canada, because as our diverse population grows, these are areas that they want to service, their culture and their needs. We're seeing Sharia products, coming up. So there is still a lot of interest to come into Canada. We field those questions every day. I think it's slower though. I think it's not the same pace that we saw maybe after Rita Wilma, when in the mid 2000s, a lot of companies came in. I think capital burden is of issue. And one of the things that we've talked about now that OSFI has a tiering rating system, can we look at the size, scale, scope, and complexity of the business and, look at the tiering, and can we reduce some of that regulatory burden if you are not a tier 1 or tier 2 insurer? This is just me talking, not OSFI agreeing by any means. But so we do see interest. I haven't seen another auto writer wanting to come in. Go figure. Ontario Auto, Alberta Auto, but we are, there are specialty markets, and MGA's, the Lloyd's platform, does allow for quick entrance into Canada, but we also see non-MGAs that are not cover holders also coming in. So, and working with domestics on specialty products with their expertise. So I actually think that MGAs offer they're not big and scary. I think they offer a good value to the Canadian insurance marketplace, especially in the P&C sector, whereby niche products are being sophisticatedly underwritten, and good programs.
Yeah, I think you make a good point about niche and underwritten. I think the strong MGAs are the ones that are going to be heavily populated from an underwriting perspective, so almost more MGU than MGA.
Yep. So let's turn to the cat risks, shall we? We know that there's, we've experienced significant cat risks. According to the Canadian Underwriter, Canada's P&C industry booked a total underwriting income of $10 billion in 2022, net income of $9 billion, and $83.4 billion in direct written premium. So that we know is the income they've made. But from 1983 to 2008, insurers average cats of approximately 400 million yearly. But then that all changed. In 2009, yearly average has risen to 2 billion. So 400 million prior to 2008 to 2 billion in 2009, concentrated on mostly personal property. So recently, in 2022, we saw Hurricane Fiona, which was 800 million. The Derecho storm, which impacted Ontario and Quebec, which was at about $1 billion. And then summer storms in the prairies, which were about 300 million. Then we go to the 2024 events. Cat IQ reported estimated losses of 7.7 billion with 4 major cats. We saw them. The Calgary hailstorm, Lori experienced that over there, which was 2.8 billion. Flooding in Quebec, 2.5 million. Toronto floods, 940 million. And then unfortunately the Jasper wildfires of 880 million. I'm sad about Jasper. We still have 2 months left. There's still an ice storm that could happen. So with over 228,000 claims across the country, resulted in a staggering 406% increase compared to the 20-year average. All these statistics were from the IBC. So IBC says that this summer set an alarming precedent, this is Celeste's words, and highlights Canada's lack of preparedness for escalating impacts of climate change. With these effects of all these cats and these numbers that I throw out to you, how is the market reacting?
We talk about this pretty much every day, Klaus, don't we? Yeah, lots of perspective there, Lori. Thank you. So 2024, as you said, there's been 4 big events, but there's actually been about a dozen greater than 25. So those would be the ones that are standouts. And as you said, it's about 7.7. I think all in for the year, it's about 8.4. We compare that to 2023. Sort of 26 events amongst various perils, severe convective storm, wildfire, rain and flooding and such like that. Nothing that impacted reinsurance, nothing of any great consequence, all in $3.2 billion. So, it is a big year. That average aggregated severity is continuing to increase. But as we think about what is borne by insurers and what is ceded to the reinsurance market, we can have very, very different outcomes. And I think we're seeing that in the last 2 years. Our frequencies are coming up. We've done a lot of analysis on this. Our frequencies are coming up, but not as much as one would think. The severity from 2024 is off the charts in terms of 2 very, very large events which impact reinsurance, and then some of the others as well. A few other comments. I think when we were sort of setting this up, are markets pulling out? Are they withdrawing from either an insurance or reinsurance perspective? Short answer is no, they're not. Firstly, from a reinsurance perspective, they're here to pay claims. Klaus will speak to this. They've been incredibly responsive in making sure that happens. They continue to see that Canada is a valuable and a very interesting and almost critical to portfolio place to trade. And frankly, we're seeing more interest amongst reinsurers going into 1/1/25. Some are looking to grow. They're seeing trading conditions to be quite interesting. It's never been as attractive as it was in 2024. And we go back 6 months, we were staring down from the reinsurance market, probably price decreases given sort of the performance. That's all changed in Canada. And I'll stop there. I think we're going to talk about policy and
yeah.
stuff like
So
that.
I guess, Klaus, what are we doing to address these cats? Are there sublimits? Are we doing deductibles? What is the policy changes?
Yeah, now you become a kind of a guest to a bit of a kind of a renewal negotiation, which we are both in. So that was a broker perspective. Now is a reinsurer perspective about the development of the cat events. Peter's absolutely right. 2023 wasn't a reinsurer's loss. 2024 very much is so, and the years before they have been affecting the reinsurance market as well. Currently, so out of the roundabout 8 billion of total cat losses, you can assume 50% is borne by the reinsurers, so around about 4 billion, and the current cat reinsurance premium paid in the market is 1.75, so roughly, and out of that 1.8 billion of cat reinsurance premium, you can kind of take away a third, which is paid for the earthquake exposure, the peak exposure in Canada. So we are kind of looking at the current cat events as a kind of a roundabout 300% loss ratio for the reinsurers. Now, this is just the current perspective. So it is triggering quite a serious kind of assessment, of course, what is happening to the exposure. And our view is pretty clear. We are talking about perils which are core. This is positive in the sense that we are not thinking about pulling out of those kind of perils. This is core. These are the core perils for the reinsurers products. So that's why we are here for, and we are absolutely prepared then to pay those kind of losses and have done so. At the same token, this is not a sustainable level of loss burden. And now the question: is this an outlier? Or is this a trend? And we believe there is a trend of increasing frequency, of increasing severity of events simply because of climate change. We can't deny that the climate change is affecting all of us. It's not only a Canadian observation, it's a global observation. And these perils we've experienced, hail, flooding, they are directly linked to climate change. And I think that we've got to be realistic about. Now, we, of course, have a kind of a marketplace, and this is a Munich Re perspective, which I'm just sharing. And we are very much convinced that there is the impact of the climate change. And I think the whole system, so to say, I mean, it starts with the government, but it also then ends with the single policyholder, the single person who's building his or her house somewhere at whatever kind of place, should be make herself, himself kind of familiar with those kind of exposures as well, and what kind of impact it has. Structure-wise, no, more close directly to your question, it is very much a matter of reinsurance product structures. So retentions, at what kind of loss level are the reinsurance products triggering, and of course also the price. And both together, they, I think, will have a turnout on the 2nd of January, and then we know what has really happened.
Are we still worried about earthquake?
100%, absolutely. As we think about regulated perils, that is the one that insurers need to report on. It's what they need to think about in terms of their All Canada PML in that respect. And I would say that most reinsurance programs, catastrophe excess loss programs, upper limits are driven by what that earthquake PML is. As I think about accumulations, there's been a lot of work that's been done on deductibles, on accumulation management and such in predominantly British Columbia, lesser degree in Quebec. But that is an ongoing issue. I just call one thing out. As much as there's been a lot of work done in the deductible space for earthquake, no one here, well, if you're all sort of Ontario residents, a standard earthquake deductible in British Columbia is going to be something between 10 and 20% of the value of your home. So if you're sitting on several $100,000 to pay your deductible, we've got a significant issue there in terms of risk borne by the homeowner. We think about protection gap, it's getting bigger. In all the things that as an industry we're trying to actually work against, those things are you're probably going in the wrong direction. Also puts a tremendous amount of pressure on the banking sector in terms of mortgage holders.
So what lessons have we learned from all these increasing CATs, either from the industry or from the regulator? We heard Jordan talk about claims and allowing, adjusters in. Has that helped? What other things have we seen or learned?
I think, first of all, it's important the insurance industry has delivered. Insurers and reinsurers, we have delivered on the promise that each single policyholder gets reimbursed according to the contract. And I think this is important, so delivering on the purpose why we are here. I think also the reinsurance programs, they have worked. So nobody has heard about any kind of insurer really running into a kind of a problem. So financial problems. The reinsurance programs, they have been sufficient. I've experienced in my home country, actually in Germany, when there was a couple of years back, there was a big flooding. It can happen that the reinsurance programs are exhausted. And then you are in trouble as an insurance company. So I think this is also important that the primary policies, they respond, reinsurance covers, they are well designed, also thanks to the broker involvement. So they are sufficient. And it's our job, of course, then to pay, to ensure the liquidity. And I think that has all worked. I think I find also positive that the FSRA has become more flexible in terms of loss adjusters, allowing in working in different provinces. Let me make the remark, I was surprised that they are only licensed in specific provinces. That's maybe something to think about from a start. So why do they have to have kind of province-specific licenses? I mean, a house flooded in Ontario, so as much as I have traveled around here in Canada, is quite similar to the house sitting in Quebec. So isn't it something, the building standards, do they deviate so much? Question mark, right?
So should there be a national test for adjusters?
Exactly, yeah. That's something maybe as a kind of a learning to improve even more. One important question I have, and Peter was touching on it very briefly, what is the uninsured loss here in Canada? That's a big question mark, and I don't know why we don't read anything about it. My concern is that there is a growing quantum of uninsured losses over time. And it's also a scaring observation in other markets. I mean, the US, Hurricane Helene had total economic losses of 200 billion and insured was around about 5%. So how frustrating is that? I mean, we've got, as an insurance and reinsurance organization or industry, I want to see a higher penetration of insured losses. I'm just curious to know how much has been insured versus uninsured here in Canada to get a feel of the urgency for that kind of discussion.
Yeah, just a couple of comments on one on industry, one on regulatory. Klaus touched on the adjusting side of it, which is very important. I think a lot of insurers, our clients, are thinking about their capability in terms of managing an influx of claims from a cat. And Laura, you mentioned $230,000 in claims from those four events. Clients were getting thousands and thousands of claims coming in over the course of a few days. Many, if not all, have sort of cat playbooks so that they can respond to them. They're geared up to respond to a certain amount of claims. In numerous cases, those were completely overwhelmed. So, they're thinking about, how they can do a better job, because the desire, the expectation of those companies is actually to respond to their insureds promptly. They got there, but there's a lesson learned in that respect in terms of, in some cases, how can it be improved. The other one is very specific to the reinsurance world, reporting on capital, and we talked about this in less so for Munich, but certainly for some other participants. In September, we started to collect funds for our clients in the hundreds of millions, and that was sort of just a first blush in terms of responding to those claims. And we wanted to match claims payouts to, that the insurance company was making to their insureds with recoveries from reinsurance programs. And in some cases, those recoveries from the reinsurer, and these are licensed reinsurers in Canada, was slowed down because they had to manage their BAT test or their MCT ratio at the same time as the insurance company was reporting on Q3 that they needed to manage against what they had from incurred losses. So we had a timing issue, regulatory driven from a Q3 perspective, and managing overall BAT ratios. And I think that needs to be thought about certainly at the OSFI level, is that how can we be efficient in that respect to make sure funds flow to those that need them promptly. We don't want to imperil an insurance company. They're going to make sure that their insureds get paid, but timing risk can be an issue. And that was one where we actually had, those events were mid-July through mid-August with a view on what the claims needed to be probably by end of August. We still had a month to go, and there were challenges. I worry about something closer to quarter end.
Yeah, convincing insurers to post more capital for these sorts of events may be challenging, but maybe there's a way to account for it differently. I don't know. I'm not the accountant. So Celeste has said that, Celeste from IBC has talked about cat risks and the adjudication of these cat risks, and advocating for a more united private-public response. Canada's starting. We have a flood program. Peter, do you want to tell us about the flood program?
We have the beginnings of a flood program. I think it's fair to say. I think anybody who's interested in the space will be watching for the November economic statement and what comes out in that in terms of funding for it. The funding came through, I want to say March of earlier this year, was it? In terms of standing up a flood program within a CMHC. The tenets of that program, and I'll refer to my notes, is providing an adequate and predictable financial compensation for residents, and it's oriented to high risk zones, so that needs some definition. And I think key to that and concurrent with that is promoting risk appropriate land use and mitigation. So there are tasks that fall to sort of an insurance entity from a risk payment protection issue, if you will, but also the mitigation piece. And then there's affordability, and then coverage is being widely available. It is still very early days. It is going to be stood up within CMHC. But there's a lot of issues to come to be solved at the provincial and federal level in terms of agreement on the approach. It's going to replace an existing DFAA program and such. I do think it's got a long way to go. I'd make one other observation, and I'm curious to what Klaus has to say. The Montreal event is a stark reminder of what a large rainfall and flooding event can do, and that was a highly sublimited event in terms of how those claims payments were made to insureds. It allowed for a very rapid claim settlement process. It's already 75% closed, which is the highest of all the events this summer and the last one to occur. But if that was full limits throughout all of those insureds, that loss would not have been 2.8, 2.9 billion, and it would have been a much bigger number. I'm not going to put one on it, but I do worry about the public balance sheet in terms of who's going to retain losses when they get to that magnitude, and if it sits within insurance companies, there's an affordability issue. There's a capital risk issue as well.
Yeah, I think from my perspective, it's maybe worth adding the global perspective. I mean, what happens in other countries? I think it's fair to say that it is a huge kind of ambition to get a kind of public-private partnership off the ground involving politicians. It's just very, very hard to get it high enough on the political agenda to get it executed within the very short time available with an existing government. It is not attractive enough to make it an easy sell or to make it highest on the agenda, because you need to sell that the government is contributing to something which is possibly not felt positive in a way, or is more tax-like, or so that some additional money is taking away, or some money is taken away from somewhere to finance it. And so I think the Canadian discussion and the problem, and I would also stress it's at the very early beginning, is very similar to the observations in other countries. It works, or when it is executed. So in UK, I was personally also involved in setting up a flood re that is very similar to the flood pool here. So Munich Re is involved there, and since then, but there was a very strong will to get it established. Currently, there are discussions going on in Italy. They have been troubled with a number of cat events and earthquake, landslides, all sorts of things, right? And they have now kind of engaged in getting it done, because there's also the public awareness for a solution. So I think there needs to be a very strong will, and currently I think the political agenda in Canada is just not having sufficient room for that.
So talking more about the global cat risks, Klaus, and you talked about climate change, like Munich Re reported that a 1.5 degrees Celsius higher than pre-industrial levels. So we're seeing record-breaking temperatures. We're seeing more and more fires. What are other countries doing that Canada can learn from? How does it work with the other countries?
I mean, fire is not a problem. Fire is not necessarily kind of the issue on climate change. It's more the perils like hail here in Canada, hurricanes. It's an issue. Flooding, it's an issue. I mean, we call them also secondary perils. Maybe you've picked up that kind of expression. Secondary means those kind of models, those kind of perils. They are quite hard to model. And the modeling industry, there is one, so they are spending quite some resources on getting those kind of perils modeled better. So just to explain, it's much harder to predict how a flood is evolving compared to a hurricane. So a hurricane is well modeled. There is enough history, so how the hurricanes are building up and how they are then tracking, etc. And then you can quite easily identify what is the exposure. Still, there's modeling uncertainty. But with flooding or with hail, that's totally different. And I think the market was very surprised about the recent hailstorm in Alberta, the magnitude of the bullets, so the size of the bullets, and of course then the resulting claim of that. What are other markets doing? I think it starts with building standards. I mean, so it's kind of it is a risk. You need to accept, and then it's then the question how to manage it. I think it starts with risk prevention. So what are the building standards? How can that be kind of adjusted? It also is about decisions where is building allowed, right? So when there is a kind of a flood zone, do you really should you really build again in a kind of a flood zone? So those kind of discussions, they are to be held, and then it's going down to insurance. Methods of indemnification, which is very much specific to the individual products. The insurance companies and reinsurance companies, at the end of the day, we need to model the exposures, and we can model them as per now. That's important. So we are committed to those kind of perils. At the same token, it's also important to acknowledge that the investors, they are challenging us as a reinsurer, and not only Munich Re, they're challenging the reinsurance industry, because they observe how much the reinsurance companies are growing their exposure to cat perils. And they are asking us questions. So how do you ensure that you can provide the returns in view of the ongoing climate change? So how can you be assured that your models are right? And that's something which, of course, we need to question ourselves as well.
Thanks, Klaus. Peter, I'm going to throw a curveball at you. We have lots of life clients in the room. Is there reinsurance and the life sector right now? Are there any cat risks that we're concerned about? How are things? No.
Yeah, I'm going to wing it. Yeah, from a reinsurance in the life sector is quite prevalent. Absolutely, it's done generally on a direct basis. I think a lot of the work that's happening now is on mortality and longevity trades, looking at doing swaps and such like that, and sort of an overall portfolio management process. From a overt cat risk perspective, I'd be way out of my depth to try to actually respond to that one.
I know it was a curveball question.
You said it was curveball.
Maybe it helps. So I think cat related life is not really, life reinsurance is not really an issue. Most of the time, I mean, every single victim is sad, right? But most of the time, it is not a big part of those kind of losses. Therefore, that's not really the problem. I think in the life area, also not being an expert in the life area, but what is interesting is the topic of pandemics. So we had COVID, and it's interesting to know that the experts, they were talking about the pandemic exposure for decades. So there have been pandemics before COVID, but they were simply not as severe as COVID. And the whole topic of pandemics has been before COVID, and I think still is a very important topic to understand, to model, and then also to manage.
Thank you.
And we'll come back on the prior question, though, just for,
Sure, go ahead.
for one comment. Canada's had a standout year in terms of cat events. Four notable, interestingly, from a media perspective, Jasper and Toronto got the most attention, neither of which is a material reinsurance event. Calgary and Montreal are. In other territories, those most certainly catastrophe events, but overall, the market is looking at flat pricing to decreasing pricing in a lot of territories. That's the expectation in North America, ex-Canada. So U.S., even though there's been a couple of quite substantial hurricanes, Helene and Milton, overall ROEs in the reinsurance sector are quite strong in 2024, perhaps not as strong as they might have been, but still quite positive. And capital appreciation continues to grow, which is actually quite positive for the sector in total. So Canada is going to have an interesting renewal season in terms of what we have. But overall, global market perspective, it is more, I would say, more of a sort of a level outcome.
Just going to touch on regulatory burden. Klaus, over to you. OSFI and the provinces have been in rapid change. We see a lot of new policies. We hear comments both from large and small companies that the pace is too much with the reinsurance, risk management, operational risks, cyber, security and foreign interference, climate, culture. Do the regulators have it right? Are we keeping pace? Is Canada too difficult?
First of all, I think regulation is important for our products. So I know there's very often this kind of regulatory kind of bashing being undertaken. So I don't want to do that necessarily. At the same point in time, it's, I think, important then to ask the question, where does a proper level of regulation stop and where is over-regulation beginning, so to say. And I was listening quite with interest in the first session. I was through the whole session, I was just wondering, so why isn't the market solving it to a large extent? So why does the regulator have to step in those kind of incidents? I mean, so when a person is not getting a response through the quote, I mean, so if I don't get the coffee of a quality I like, I just go to another kind of coffee shop and get the better product. So why is that? I don't understand it. So it feels like there's more kind of taken on board on the regulators than a functioning market would need or would require. And another question I have, has there ever been done the kind of a benchmarking with other countries? So why do we need that much of regulation here in Canada? How does it compare to other markets? And what is the outcome? Is it really worth to have that, or does it work in a different setup as well?
Klaus, I'm going to say, well said. I think I would just emphasize the pace and volume. Like it is a lot to address. I hear that from clients regularly, and from a reinsurance perspective, if one thinks that the regulations are primarily written for the insurance market as opposed to the reinsurance market, are there more nuances that can be brought in, both from a tier perspective, as you noted, or scale, and particular to the reinsurance sector?
Or some recognition, perhaps, of BaFin or the PRA or other regulators, like looking, because we are primarily foreign branch regulated, and like most of the entities that are in Canada are foreign branches. Is there opportunity to utilize the home regulators' regulations? We have 2 minutes left, so I was going to open it up to the audience if they had any questions. Anticipating none. Oh, go ahead, Jackie.
So I am the executive director of Frontline Supervision at OSFI. So I'll ask you as CEO of a reinsurer, what would you take off the plate? Because I was an executive in RSA, and we talked about third party, and we talked about climate, and we talked about cyber, and we talked about technology, and we talked about every topic that we've issued a guideline on. So to me, there's like, it's just what smart, risk, proper risk focused executives talk about at insurers. And they're not rule-based, they're principle-based. So what would you take off the plate from what OSFI's done?
Question for me?
Yeah.
And it's a fair question, and so I was expressing my thoughts as a question. So I think
Pivot.
yeah. But it's it like I do with other topics when I've started now the CEO role. So I also ask myself the question: is this operation efficient? So do I have, if I ask my managers and ask them, look, are you efficient, or do you have any kind of areas where we can save resources and become more efficient? Guess what they are saying? They say, no, we are super lean. Right. And they might possibly be super lean. I don't want to necessarily say it's not, but I need, and I'm trying to find kind of benchmarking. I try to find kind of best practice and compare. I want us as an organization to challenge the status quo, and I think comparing with other markets or entities is maybe the easiest way and or the start to find areas how things could be done differently. And I think there would be a kind of a perspective which would help all of us in our respective functions to possibly identify areas where things can be done in a more efficient way. I'm always also asking the question, would the customer like that kind of level of regulation pay for if he knew or she knew? Of course, it's a kind of a very superficial question. So, but I think this is as a kind of a guiding principle sometimes helps.
So my response to that, Jackie, because I hear from a number of compliance departments, is timing. It's not that you take any of this off the table, is perhaps Canada could time the implementation to align with the US or with Europe, because some of these, I'm going to pick on climate. I think Europe's requirement to comply with some of the climate guidance is a little bit later than when OSFI wants it. And so that creates a burden in terms of Canada may be smaller to the global organization. Our questions are not aligned, so there's lack of harmonization. And because we're first, versus what, say, Germany or France or whatnot is asking, it creates a resource problem. It's not that the company is not considering or working towards it, but the larger organization is working to a different timeline. So that is just one of the observations. Final thoughts, guys. Canadian insurance industry, reinsurance industry. What do we see as emerging trends, risk? Any final thoughts?
I think the trends, risks out there, emerging risks, cyber is a big topic. New technologies is a topic. I mean, risks is always also an opportunity for us in the industry. What I also wanted to say about Canada is you have two very important ingredients here in Canada, and the very most important ingredients for insurance. It's capital. So there's plenty of capital in Canada. I don't know where it goes, whether it can be deployed more for our industry, don't know. And people. So and those two things, you just need to create insurance or reinsurance. And the people I have met so far, they're really great. Not only in our organization, the brokers are excellent, but no, generally it's a very interesting market to act in because it's an enormous talent pool, which becomes very important in view of the development of the war for talent, scarcity of talent. So it's a great market environment. Challenging though, also with the brokers, of course, being good in their role. But it's an honor, and it's really enjoyable to work in this market and this city.
Final thought: if I put myself in the place of the insured, it's managing around, well, certainly weather-related events, but the affordability of proper insurance coverage, the right kind of coverage so that I'm actually getting compensated for the losses that I have, and I think putting at the feet of government appropriate investment in resilience. And I think those things need to go hand in hand to protect ourselves going forward.
Well said. Klaus, Peter, thank you so much for bringing your insights today. It's really appreciated.